Have you ever heard the old saying? It goes something like this: everything that can go wrong will go wrong. And in 2022, in the financial markets, that is the most true statement you'll ever hear. Because this year has been, if it can go wrong, it will go wrong. And oh my gosh, the financial market's a mess right now. We got collapses all over the place. I got to take you through what's going on here, why this is happening, how bad it's going to get, my view on this. It's going to be a busy video. Hope you guys enjoyed it. As always, thank you everybody that subscribed to the channel. What a mess, okay? We're starting in crypto today. Don't talk a lot about crypto on the channel, but we got to start with this baby here today, okay? Because this is where the drama's at. By the way, I just looked at Bitcoin. It's now even lower than when I took this screenshot. It's now in the 15,000 range at this point in time. But Bitcoin's fallen and dropped almost about a quarter of its value has been lost in the last 3 days. Yes, in the last 3 days. An absolutely insane kind of move there. And I do worry that potentially a lot more Bitcoin losses can be coming, potentially because there is a lot of worries that other exchanges or brokerages or whatever you want to call them could potentially have to come up with collateral. Maybe other funds that are in the crypto space have to come up with collateral. And so therefore, a lot of these folks maybe store some money in Bitcoin. And so if you have to come up with collateral, you're kind of like forced to sell something. And, you know, that's a bad situation. And I wouldn't be surprised if certain big exchanges or funds are dumping Bitcoin here today, not because they want to, but because they have to. There's a difference. If you have to sell, you have to sell, okay? Ethereum has lost over 30% of its value in the last 3 days. And this is another one. I mean, Ethereum's the second biggest out there, right? So if you're talking about a place where a lot of folks store some, let's just call it reserve money, whether you're a fund or anything in general, it's in Ethereum. And I think a lot of folks are being forced, and a lot of funds and things like that are being forced to sell Ethereum at this point in time, regardless of price. And that's the thing, when you're in a forced selling situation, it doesn't matter. Ethereum could be trading at 900 right now, could be trading at 700, 800, right? And remember, Ethereum, in the last crypto mess that we had in the summertime, right? Ethereum fell under 1,000. You know, this is, in my opinion, this is just as big, if not a bigger crypto mess we're in right now. So if we saw, let's say, Ethereum under 1,000 in the next few days, I wouldn't be surprised at all. We'll see if it happens, but I would not be surprised at all when it comes to that baby, okay? This is massive news. When you think about this for a moment, this is important. If you were on the front page as the #1 story on CNBC, it's a big deal, okay? Binance just backed out of the FTX rescue, leaving the crypto exchange on the brink of collapse. That's the #1 story on CNBC. Binance is backing out of its plans to acquire FTX, the company said on Wednesday, leaving Sam Bankman-Fried's crypto empire on the verge of collapse. The reversal comes one day after the Binance CEO announced that the world's largest cryptocurrency firm had reached a non-binding deal to buy FTX's non-US business for an undisclosed amount, rescuing the company from a liquidity crisis. Earlier this year, FTX was valued at $32 billion. On Monday night, Bankman-Fried was scrambling to raise money from venture capitalists and other investors before it went to Binance, according to sources in knowledge with the matter. It's unclear who's next in line to buy the exchange at this point in time. And it's a mess because FTX was supposed to buy, obviously, Voyager. They were supposed to buy out BlockFi. And so what's going on with those deals now at this point in time, right? And, you know, I'm almost like, I still have 5 figures on Voyager, and I don't think I'm going to see the money. I'll be honest. So I'm likely lost 300K in the stock plus another, you know, whatever amount because I have no hope now at this point in time. I don't think I'm going to see that money, and just a complete mess. And you know, when it comes to these guys, you know, what I witnessed with them was just, it seemed like they were just not on top of their game. You know, I remember we were supposed to do this you know, long-term partnership, and they were going to get into stocks. And so they wanted to have me as a, you know, creator, you know, kind of pitch their new stock service, right? But all of a sudden the first month came around and they still wasn't ready. And so they're like, okay, you know, pitch our crypto product. So I'm like, okay. So I did that. And then after the first month, they're like, hey, you know, no one's signing up. I'm like, yeah, because you got me pitching a crypto product. And you realize my audience does not freaking care about crypto. Like, I have a very specific audience that cares about stocks, that cares about the market, that my audience skews a lot older than most folks on YouTube Finance, and is a lot like higher net worth individuals. And so these folks they don't care about crypto. So the second month comes around, still they don't have it ready for me. I'm like, okay. Third month comes around, still don't have it ready for me. And they're like, no one's signing up. And I'm like, yes, because my people don't care about crypto. Okay. Like, how hard is that to understand? You guys are supposed to have this stock service. And so the relationship just was a very, let's call it not a healthy. It was going to end in divorce, and it ended up in divorce because neither side was happy. And I'm like, what are you guys doing here? So it just seemed like that, whole situation, it seemed like they had way too much going on. And I mean, they were doing deals all over the place. It seemed like a mess. I'll just be completely honest. It seemed like a mess. And now it's obviously a much bigger mess, right? So if you look at this, right, think about this for a moment. And I've always given this comparison over the past year, and yeah, I know if you watch, obviously, Millennial Money, I would always make the comparison of crypto reminding me of kind of what, happened with tech stocks in the tech bubble, where they went to these insane valuations before they were ready for prime time, right? And I would talk about like how Bitcoin, Ethereum, and all these things, yeah, they can absolutely be huge in the future and game changers, but they're not that today. Right? They're not that today. They can be in the future, but they're not that today. And everybody's getting so excited, and they threw these massive valuations on these things, right? And I would speak about that time and time and time again until I was, what do they say, blue in the face or whatever. And it's identical, because the NASDAQ in the tech bubble, did you know the NASDAQ in the tech bubble fell over 75%? Over 75%. I think the lows for the NASDAQ was something like, I think it fell like 77 or 78% in that situation. I mean, that's a hard number to even fathom nowadays. But yeah, that happened. Countless stocks that were those tech companies, they went bankrupt. Stocks like Amazon went down 90% plus. So this was a situation that it was devastation, right? And obviously a lot of people got way too excited way too soon. And a lot of folks lost, obviously, a lot of money, and they got really, really excited about things that weren't ready yet, right? And there were some great companies that were built out of that. A company like Amazon that went down over 90%, ended up becoming, obviously, a giant corporation. There's several others that were in there, right? But the fact is, these companies got valuations on them before they were ready to get those sorts of valuations on it. And the same exact thing has happened in the crypto space. And you look at this, right? You think about it. The Bitcoin's kind of like the NASDAQ of the crypto, right? That's kind of how it's viewed. And the move is identical. It's identical. Bitcoin's down 76%. It's identical, man. And it's crazy. And I did a reaction on my new channel last night to basically kind of what happened in the great financial crisis in 07, 08, and what happened with the banking institutions. And it's a carbon copy right now that's going on in the crypto space, went on in the banking space. The only difference is, and the only difference is in this situation, is now we can see what's going on. We see a crypto coin fall 75% of its value, and it's like, oh my gosh, this is creating a massive liquidity crisis for this firm and this firm, and we can see it all play out. What happened in 07 through 08, when that financial devastation in the banking system with investment banks in general, none of us really got to see that. And most folks that even super sophisticated in the market still don't even understand the complex products and the derivatives contracts and all those sorts of things, right? The collateral debt obligations that basically these banks were trading against each other. So we didn't really get to see that, and people didn't really understand, why is this bank all of a sudden failing? Why is this investment fund failing? Why is this failing? People didn't get it. Now, with this crypto mess, it's the same exact thing, but we can see it all playing out in real time. It's like, oh, FTT, whatever, fell 75%. Oh, Luna coin fell, da-da. We can see it all. We can understand it, right? But it's identical. It's identical. The problem with the crypto space is there's no backstop there. At least in the, obviously, 07, 08, 09, the big banks, right? The Fed was there to save the day. The government was there to save the day. In this crypto mess, like, the government's like, well, that's fine. You guys can fail. And that's just, it is the way it is, man. It is the way it is. Now, so obviously this, if you think crypto can't affect the stock market, unfortunately, it still can. I don't think in 2023 and moving forward for the next few years, crypto is going to affect the stock market anymore. But this year it does. And this mess is creating mass panic in overall financial markets. It's probably creating margin calls. It's creating, a capitulation. It's creating all types of dynamics, and you can see it on a day like today. I mean, look at that. It's Red Dead Redemption out there. Meta just out there trolling the whole market. It's like, you guys hated me. You said I was the worst, and look at I'm the only green one out here. It's incredible. I mean, the moves are epic, and we'll talk about a few of those moves in just a moment here. But I mean, a heat map tells you a whole lot on how bad it was out there today, right? Look at Disney stock today. The safe stock. I mean, Disney's usually would be talked about and hyped as one of the safest stocks in the market, right? Because it's Disney. It's Disney. This stock just entered the down 50% plus club now at this point in time. Incredible. Incredible. I mean, that's one of those stocks that you almost never would people imagine that stock falls over 50%, and it's exactly what's played out here. And the issue with Disney is they missed numbers huge. It was a disaster. I went over the numbers in depth yesterday. Revenue miss, massive. EPS miss, massive. And the one thing that beat huge is a huge money loser for them, which is their Disney Plus service. So it's just bad across the board for Disney. They can't get out of their own way. And unfortunately, the stock's just in a tough spot in the short term. I probably will start buying it. I've said this in a video, I think last week or the week before. 2023, I think, is going to be the year of me getting into a lot of large cap stocks. Whereas this year has been a lot of small cap stocks. I think 2023 is going to be a lot of these large, especially if they continue to fall. The Disneys, obviously Meta's one I've already started buying very, very heavily recently, including I threw $77,000 or whatever into that like a week or two ago, right? Google, Amazon. I think a lot of these stocks, I might start buying Tesla again in 2023, NVIDIA, AMD. It's going to be a lot of large cap buys for me in 2023. That's the way I see it setting up. And the more damage that happens in that space, the more heavily I'll buy a lot of those type of stocks. And, so that's just, everything's lining up perfectly as far as that whole situation goes in regards to that, right? This was obviously massive news. This came out just before I went to bed, which was like 5 a.m. Meta lays off more than 11,000 employees. And, at the end of the day, Zuckerberg kind of, he kind of already stated this on the conference call. He said, there's going to be a lot of, he didn't say firing. He used some other word because firing is not appropriate nowadays. But, let's just call it lowering reduced headcount in certain spaces of the company. And a lot of people didn't read through that. And what I read through is that means there's a lot of firing that's coming. And especially, and I'm sure some teams will grow for Meta, but a lot of teams are going to shrink and shrink in a big way. You got to understand, Meta doubled their workforce in less than 3 years. They overhired. Their growth was insane, and now their growth is like, They overhired. And so jobs have to be cut. And I wouldn't be surprised if they do another smaller job cut in the first quarter of 2023. I would not be surprised at all. And that's just it has to happen. That's the bottom line. The profitability of the company's eroded in a massive, massive way, and they're likely way overhired at this point in time. You got to understand, just like investors got FOMO in the market, right? These companies, especially in Silicon Valley, they got FOMO. And what happened was they looked out there and they said, oh my gosh, I got to steal all these employees from these other companies. And so you had every company in Silicon Valley a year ago, 2 years ago, hiring everybody they could get their hands on. Like, oh my gosh, application, hire them. And it was a war of employees. That's over. It's long over now at this point in time. And it's going to be over for at least the next 1 to 2 years. There will be a battle for those employees again, but it's not going to be for a while. I can tell you that. And I don't think this is the last cut you'll see from Meta. I don't think this is the last cut you'll see from these big Silicon Valley type companies. I think you'll see more. And, what's interesting, this is what 11,000 people look like roughly. If you didn't know like how many people that is, that's roughly what 11,000 people looks like right there, okay? And think about this for a moment. I think this is very important. So 11,000 people just lost their job. Now, if this was a year ago, I don't think those 11,000 people would have trouble finding another opportunity in Silicon Valley, right? But where are those 11,000 people going now? They're going to go to Apple? I don't know if Apple's going to be hiring like crazy right now. They're going to go to Google? I don't think Google's going to hire like crazy right now. Google's been reporting some extremely slow growth, like some of the slowest growth they've ever seen at the company. And, they're having problems with, creating a company that's more profitable. So I don't know if they're going to do it. Are they going to go to Microsoft? I don't think Microsoft's out there to hire a ton of people right now. They're going to go to, some of these other companies that have been cutting employees? No, because those other companies are cutting employees right now. So you think they're going to magically pick up the Meta employees? Probably not. And also, think about it, a lot of people are going to look at, they're going to say Meta might have got rid of some of their lower performing employees. So why would I go hire some of Meta's lowest performing employees? So now there's a lot of people out of work. And I just don't know if there's those jobs in Silicon Valley right now, in the San Francisco area and the Bay Area in general, where those folks can just go say, hey, I'm working for Meta. I was working for Meta. I'm ready to go get another job that pays $200,000 a year, $300,000 a year. I don't know if those opportunities are out there right now. And that's the problem that we're going to see. And there's plenty of jobs out there that are pay you $40,000 a year right now and $50,000 a year. But the problem is, I guarantee you, most of those people probably were making like $100K and up. And now they might have to get a job where they're making $40K or $50K. And that's what happens in this sort of economy. And that's a really tough part. Okay. Tesla. I mean, the stock can't find a bottom anywhere. It's down now 55% year to date, 55%. It's down another 7% here today. And, if you're thinking about, Tesla's the ultimate risk on play. It really is. And what was the market today? Risk on or risk off? Risk off 100%. No one wanted to take any risk in the market. And they wanted to sell everything risky. Well, if you see Bitcoin down the way Bitcoin was down today, unfortunately, Tesla's going to be down massively as well. It's as simple as that. It's the way it works right now. And someday there will be divergence there, where one can go one way and one can go the other, but it's not today. I can tell you that. If Bitcoin was up 15% today, Tesla stock would have been up massively today. It probably would have been up 7% or 8%. It's the way these instruments work, and you can track them over time, and they follow each other around. It is what it is, okay? The dollar was up today. Another reason why the market was tanking today. Bottom line is dollar up, stocks down. Dollar down, stocks up. Unfortunately, it's kind of how it works right now, and it's almost to perfection. Like, you track the dollar over this year and you track the markets, and you're going to find when the dollar's going down, the market can actually recover. And, when the dollar's going up, the market goes down. And look what the dollar's done all year. And look what the market's done all year, right? You can track these things. Now, another component of this is there was supposed to be, Wall Street thought there was going to be this big red wave that came, okay? And, it was more like light red spotting or something like that, okay? It was no massive big red wave that everybody had, I have several friends that are Republicans. I have several friends that are Democrats, several that are Republicans. Democrats did not go into last night confident. And my Republican friends, they went into last night unbelievably confident. They thought it was going to be a massive red wave. It was going to be domination. And all my Republican friends, they all walked away last night very disappointed. Let's just call it that. Very, very disappointed. As you know, with me, I don't vote, so I'm not either party, right? And by the way, you should vote. Don't be me, okay? Don't be me. I don't even know the president. I'm just kidding. I don't go that far, right? But they walked away very disappointed, and I think the market was a little disappointed. But at the end of the day, there's still going to be gridlock on Washington, which is what actually the stock market wants to see. They want to see gridlock. So I think it was a factor in today's devastation, but I think it was much more the messy crypto situation. I think that's the main thing that's scaring the market right now, is that whole mess. Let's just call it that, okay? Now, 2022, it's the purge of debt and risk. That's what I call it. It's the purge of debt and risk. And it's a year where, like I said at the beginning of this video, everything that can go wrong will go wrong this year, right? And that's just what we've seen throughout you can get your hopes up about something, and then something breaks. And then you get your hopes up, and then something breaks. And you get your hopes up, and then something breaks. And it's not usually like this for anybody that's newer to the market that's watching this video. It's not usually like this. This is not usually how the market is. But when you're in a bear market crash scenario, devastation, this is what you get. And every time you think it's going to get better, it just gets worse. And it gets worse. And it's kind of like a horror movie or something like that. It's a horror movie of the year. But what will emerge out of this is a much healthier market. Because what we're purging is insane levels of risk-taking. What we're purging right now is insane levels of debt, right? And when you go through one of these cycles, everybody starts thinking about being conservative with their money, being conservative with, if they are going to take out any debt, very small amounts, those sorts of things. And so you actually have a very healthy market emerge for the next few years. Now, the issue is, eventually this will happen again. Okay, it's not going to happen for a while, but what you're seeing, 2022, you will see this in the future. Because what happens is as the market starts recovering over time, as stocks start doing better, crypto is not the end of the crypto, okay? They will come back down the road. And whenever Bitcoin comes back, whether it's in a year from now or a few years from now, and Ethereum and a lot of the other cryptos and things like that, as you go more and more risk on over time, people start taking more and more risk. And then you kind of have this blow off top, and it seems like everybody's going to become a billionaire. And then the next thing you know, it's the downfall again. So I think it's important for everybody to remember, this is not the last time you're going to see this in your lifetime. You will see this again. You'll actually probably see this, especially if you're younger. You're going to see this many times in the future. And, you know, for the other folks that are, you know, kind of down about this, just imagine there's going to be a much healthier market that emerges in 2023 and beyond. Because what we went through, obviously, at the end of 2020 and into 2021, it was unhealthy. Margin debts went to the highest numbers we've seen on record in 2021. The levels of risk-taking were through the roof. And there's a come down from that. And we're experiencing the come down right now. And it's harsh. It's tough. It's no fun. But it has to be done in order to emerge as a healthier market. And it's no different than if you were very out of shape and you went to the gym for the first few times. It's going to be brutal, right? You know, you're not in good shape. You're going to put your body through some things, and it's not going to be fun. And you're going to be, after that workout, you're going to be feeling like, right? But it's what needs to be done so you can emerge healthier. And then over time, you get in a better and better spot, and you realize, okay, that what I had to go through there, it was worth it. And I think in this situation, it's 100% in that same context of it will be worth it. But it's very painful. 2022 has been a very painful year, and I'll keep you guys up to date on everything going on here, but it's a mess, man. It's a mess. It's a mess. But it's a mess because we're cleaning up a mess. Does that make sense? Hope you guys enjoyed today's video. As always, much love as always. Appreciate each and every one of you that subscribe to the channel, and have a great day.